First, let me thank to the Exprime team for inviting me to have this session at the conference. When we were discussing about what should I talk, I discussed with Daniela that I have nothing much science to share the with the audience, but I will try to give an overview of the markets of the Central and East European market through our experience. So this is the table giving an overview about all these countries, and as we can see, the share of the property premiums as a measure in the total gross written premium is more or less the same. The average is 21.84, and the minimum and maximum are Hungary and Bosnia and Herzegovina, and the Macedonian experience is around the average. What I plan to set is published already here in the promoted material, so I can just say that I agree with what I have read, and maybe in order to see the problems that the property markets experience, I mean in terms of the gap of insured and uninsured, maybe we can use the examples of the households insured. For example, in Macedonia, this is a very low figure. We'll see later in the presentation, about 5%. And I'm glad that the report presents here that Poland has 80% and the Czech Republic and Hungary around 50%. So I will emphasize the Macedonian case in order to see once more what are the problems. So we can see that it's a market consisting of 15 insurance undertakings, 30 brokerage companies, 13 insurance agencies, and 3 banks acting as an insurance agencies. The insurance penetration is low as 1.48. The insurance density is like 65 euros. But there is a positive trend in all those years, an increasement of the insurance premium, especially in the life segment, with double digits like 24 this year and the previous also around 20%. The whole market premium is very low in comparison to the other countries, but it's 134 million euros. And what is interesting is to see that there is a very dispersed position of the companies. In terms, there is no high market concentration, and all the companies work in a competitiveness conditions. Even if we see the groupation, I mean the market concentrations through the insurance group, we can see that it's also except with the winner insurance group, a little bit above 20. The others are also below 15% in the expressed as a group. So this is a position of a very competitive market, but we still we can see the disappointing figures of numbers of residences and household insurance. It's very low, 5.41. And if we go and see this structure of the 22% of the property insurance, we can see that only different risks in properties is a small part of agriculture insurance is covered, and other risks. Or if we see this table also, the household insurance is even smaller in terms of having a comparison with the other legal entities. The total premium, when we see it, it's 14 percentages for fire, 7.33 earthquake, only very little, some only 0.36 is for flood, and 11 percentages for hail and frost, and this is the premium for the other risks. This was the problem a couple of years ago when we were discussing the starting point in developing cat and weather risk markets in the region, and we are facing the low level of insurance penetration, especially for cat insurance, lack of awareness and insurance culture, perceptions that the state can offer solution for absorbing the risk effect, and lack of appropriate risk modeling to map catastrophe risk exposure and provide sound pricing of the products, and lack of available and affordable alternatives for risk transfer. This was the reason that our state entered into the project known to the public as Europa Re, but at that time promoted as a World Bank project together with the Swiss Secretariat for Economic Affairs and Global Environmental Facility. The goals of the project were to increase the level of catastrophe insurance penetration, educate consumers, improve and standardize quality, enable insurance companies to sell complex weather and catastrophe risk insurance products, and help governments and regulatory authority to enact adequate regulation and policy reforms. Benefits from the project were seen that after these years spent in the development phase, the project allowed a potential on the supply side for the insurance companies and produce well-designed and actuarially priced insurance products, appropriate expertise, technical support and sales trainings, adequate reinsurance coverage, efficient, reliable, and fast claim settlement process, and also participated with the PR and media presence in increasing public awareness and financial literacy, and also launched a Cat Monitor, a website for general public for monitoring and building awareness about earthquake and flood risk. It is available on this link. But also some of the campaigns made in the previous period. But the problem at the end of the story, I mean, from this perspective, is that the limiting factor continue to exist that make the general property insurance underdeveloped. And one of the major reasons that we consider is first the image of the insurance companies that have in the public, that comes mostly due to the poor MTL claim settlement. And we receive a certain number of claims, and the people are discussing all the time that they're not satisfied about the claim settlement of the MTPL. But at our agency, we have almost no complaints received about property insurance. A few, nothing significant. So the bad image or the image of not appropriate settlement of the claims, if averting people from buying comes from another line of business. Also, distribution is mainly made through direct sale and insurance agencies, where when property insurance is confirmed, because brokers are concentrated more on MTPL and life insurance. Life insurance provides a good brokerage, and MTPL is easy to be sold. So property insurance needs more time and more assessment for the brokers, and this is a channel that is not very much used. Also, all those problems are still problems of the analog phase, let's say, of the development in comparison to what we were discussing these 2 days here. So there is no online sale. Only one company has an online offer, but it's very small, the number of policies sold, and there are neither alternative distribution for the property insurance. that's basically the situation in most of the country, more or less, but that's why I'm presenting it through our case. And there are a lot of other factors that I haven't mentioned in the presentation, but we were referring to them these days, as, for example, income and the human nature. We have done some research that people that can afford property insurance do not buy it. And the reasons are always, well, I will do it next time. I have no habit of doing it, or no good explanation, no reasonable one. And those are the people that can afford it, at least with the simple or some medium coverage of risks. And so that's one. Also, there is one article published by Professor Wolfgang Rohrmann. It's called 1200 Years of Insurance Agents, and gives some historical background about the traditions that were present previously in mostly in the Balkan states, about how the insurance was sold. Learned from the Austrian companies, but now the modern way of selling, especially when the directive for European directive for distribution from 2002 is implemented, he sees that it's changing the whole concept of the agency. So it's also one of the possible problems that I am addressing, that the channel of distributions for property insurance should be rechecked, and that's another challenge. So further challenges for cat insurance is not existing of a microinsurance. This is in some countries a very good example of increasing the insurance penetration, but we have neither experience, neither offer for microinsurance. Then there is a bank regulation that will differentiate insurance coverage on the mortgage. For example, in the bank regulation, it's usually said that the mortgage should be covered with insurance policy, but it's not giving any incentives about the risks that are covered. So whether it's just fire or it should be a cat risk, and in then terms to provide maybe some relief on the capital charge of the credit portfolio. Those are also challenges that are open, and this is the question that we're addressing all the time. I mean, voluntary versus mandatory, having in mind that for example, the limited participation on the program of the Europa Re in our market, only 3 companies that have jointly have market share of 15%. It's really just a very small participation on the supply side. So whether and what is going to be the way, whether to offer some mandatory offer, at least on the project, or mandatory for all the public property and household, at least for earthquake, are questions that are constantly open, but we know that they are treated as a levy, as a tax on the public, and it's very difficult to be decided from the political, at least, standing point of view. So those are my views and about the property insurance development in the region. And if you have any questions, I will be glad to answer. Thank you.